Stop ES by 392.
Good morning, traders. Can I please get a screen and audio check? Traders, can I get a screen and audio check in the YouTube and Bookmap Discord TraderLab? Thanks. How we doing in YouTube? Okay, good. Good morning, everybody. Welcome to the TraderLab. I'm your host, Tom B. Thanks for stopping by today. If you're in TraderLab, I hope you're following your plans and participating in the opportunities per our structured trades and your vetted trade plans. The key to trading, at least in my opinion and experience, is to just wait for your bus. In between, it is very important to understand your emotional states, how you respond to uncertainty, and really listening to the voice in your head, but differentiating between the voice, which is irrational in a trading environment, and your trade plan. The differentiator, in my opinion, and from my own experience and the experience of others, countless others over almost 45 years of trading, is that I believe if you do the work and understand this is a business of probabilities, if you accept that almost anyone can learn to trade. Being able to trade is the ultimate obstacle. And most retail traders really minimize this element of trading because they do not understand the environment that they are operating in, and that we are wired not to operate in an environment of certainty, but to seek certainty or safety. So please keep that in mind. And the basis of the TraderLab is to help traders understand how the market works, why it does what it does, how to integrate order flow to potentially give you an edge when you're competing in a competitive environment with other traders, and also to build out the business side of trading or trade plans. So let's go take a look at what's going on. We got to go take care of business first, and we'll get into it. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And please remember, this is not a trade calling room. This is based on structured trades, and these are available to everyone in the Bookmap Discord TraderLab community, and there is no cost. Not only can you take advantage of the TraderLab community and participate in it, bring what you know and what you have done. There is not one way to trade, but there might be a right way to trade if you understand the business of trading. Then you can do whatever you do. And of course, if it has a statistical edge versus just randomness, then you may find that this business is not a prediction business, but more a gaming business. Gaming is literally probabilities. Thinking in probabilities is operating in uncertainty. Our nature is to want certainty, and many of us begin our trading development designing everything around the need to be right and avoid pain in an uncertain environment. That's a psychological need. The reality of the business of trading is there is no certainty. There only is uncertainty, and thinking in probabilities versus thinking in certainties. and it is a major obstacle. So if you're interested in dealing with that potential, if you've been working hard but not going forward in your development, there might be very simple reasons for it that you haven't contemplated, because we all experience success with randomness. Everything works sometimes. Gamblers walk out of the casinos with dollars, right? Well, yet the house makes money. Why? Because over time, in a uncertain random environment, if they only play games that have a statistical edge, that edge shows up even though it's random. Can you accept the randomness of the environment you're in? Can you accept that there's no certainty? And then can you adjust your thinking and your behavior to that environment, not trying to fit trading into your comfortable environment, but to actually adjust yourself to the environment we are actually in? That is what the TraderLab is about. That is the community of the TraderLab. And there's a link in the bottom of YouTube. If you're interested in accessing the TraderLab community, there is no cost. And then you can download the PDFs of structured trades, watch the library of webinars, and these streams plus additional support is available exclusively to Bookmap TraderLab participants. Let's go from there. And thanks again for visiting the TraderLab. And please give a thumb up in YouTube. Now, I always start the same way. I start with an overview of the condition of the market and some statistics. And statistics, remember, if we're talking edge, right? Gaming, statistics are pretty darn important. Now, a statistic does not predict because it's always uncertain, but a statistic gives you something to work towards. So let's take a look. Yesterday, we had what was called a neutral day. In a profile world, neutral day means the first hour high and low was taken out. That suggests balance. And if you remember yesterday, we had a very tight range. What does that represent? It represents that even though the market is long, that the sellers were not able to get control and the sellers lost the battle. Even though weak longs got taken out, we're still marching north. That tells you something right there. So we took out, and remember the sequence, we took out the low side first yesterday, and then we took out the IB high. In fact, yesterday in the stream, I narrated a long trade that actually, and you guys saw it at the end of the stream. And remember, if you're in TraderLab, that stream is available exclusively to you to reverse engineer and review. We took out the IB high. That's called the neutral day. What are we doing today? The same exact behavior. That is what TraderLab is about and what having a trade plan is about. Now, nobody predicts, right? But if we understand how the market works, why it does what it does, and we can integrate a high-tier order flow tool like Bookmap into the mix, it might give us a statistical edge and the ability to participate. And how do you participate? You need to anticipate to participate. That means structured, vetted trades that are in your plan, and you hopefully calmly wait for them, just like a bus, to show up. This is the RTH Open. By the way, please give a thumb up in YouTube. I wanted to give you a couple statistics. By the way, let me give them to you. Overnight volume. Now, they're not that important today, but I will give them to you. Taking out the overnight high, that's the ETH high, has about a 69%. I don't know where it is. Hold on. I've lost it. It's covered up. Guys, where's the overnight high? 46.5? Okay, yeah, it's right here. This is the ETH high. So we got a 69% probability, past performance not indicative of future results. The first hour's high, which is called the IB high, about a 68% probability of taking it out. That's this. The overnight mid, which is down here, And these are all, by the way, all these statistics are available. Now, a statistic is only merely that, a 72% probability of taking it out. Taking out yesterday's high, about a 55% probability. Now, these statistics have nothing to do with the condition of the market, which is bullish. And there's another piece in a higher time frame. Don't want to make you crazy. Not my job, though I might. Let me try to go a little further down the food chain here. This is yesterday's settlement. This is the highest volume from yesterday. Think of this like a retail price. In the ETH, the low, ETH low was at yesterday's settlement and yesterday's volume point of control. A volume point of control, all it is high volume. And the market is an auction. And what the market does is it tries to figure out what's a fair price. Now, have you ever gone to the store and there's a price, and then you come back to the store and it's no longer available? What does that say? And it's always potentially, this is too low. So I come in with the ETH. I know this might underline. I'm always going to say maybe because that's the facts, Jack. Maybe it's too low. And we don't know if we'll come back, go through, whatever. You don't know any of this. This is part of the joy. So now let's go a little further along. In the ETH, which is the last auction, remember, down below, too low, this is now the retail price. What is that telling me? Potentially, again, too low. If that's too low, and this is now the new retail price, and you can't buy it at yesterday's high volume or retail, and what makes it retail? I use the term because it's like shopping. And you go to a store, high volume is where buyers and sellers agree to do business. Now, if that pricing changes, you can't go back there and buy it unless it comes back to that price. And at the moment, we're going north. So we open. Now I'm going to is everybody tracking? This is before the market opens in RTH. This is what's discussed in TraderLab. These are the statistics. This is how the brain works and maybe trade planning. Are you guys tracking? Everything is suggesting north by northwest. Give me a thumb up and give me a yes, a no, a maybe, I don't know. Ask a question. Great. Willers is asking me more stats together, more probability. The stats are a piece of it. The number one piece in this that I have found based on what I do, hold on a second, I got to get rid of some stuff here. Hold on a second, guys. I got to make an adjustment. Okay, sorry about that. Got to take care of business, as they say. Okay. Context is number one in this business for me. In other words, what is the market doing? Now, there's another piece to this, which I don't have time to go into, but we already discussed this in TraderLab. You know, I post all of this when I can in TraderLab before the RTH open. So everybody in the TraderLab community is aware of the potential. Nobody can call a trade because, you know, it's a waste of time, and I take stops as maybe more stops than others. I don't know, but I just take them when I take a trade. You know, I'm not about being right. I'm about taking the right trade and then accepting the random outcome. It's not what we want. We want all the trades to work. I understand. I don't think the casinos realistically open the door for business and only want winnings. They accept that they have to pay to get the gamblers in the door. Everybody wins sometimes. You can throw a dart at the board. And this is what keeps us retail developing traders potentially going down the wrong path. When we have something that works, our mind remembers it. We see patterns, you know, whatever it is, and it works. So we're going to make it better, right? So it works better. That's very logical. But suppose it doesn't have an edge. Suppose it's a guaranteed loser over time. Would you keep trading it? Most of us never get to the point of understanding market mechanics and what an edge is. We just get into prediction and being right. I call it Trader Groundhog Day. I did a webinar on it. It's available in the Bookmap Discord TraderLab community. Remember, there's a link in the bottom of YouTube if you're interested in being in a community, and there is no cost. I think no cost is good. My mother always said no cost is good. So let's look at the RTH Open. Now, RTH Open is, here, I'm going to show this to you. And I'm going to narrate microstructure. What I do, well, I do a number of things. What I attempt to do is follow the behavior with order flow of the participants, and I overlay it on a chassis of volume. Volume, in my opinion, tells the story. It's not predictive, and nothing really is. What it tells me is if a price is too low somewhere and we leave it, it's the same as what I was just showing you at the top of the stream in fractal. So what is a fractal? Think Russian dolls. So all it is multiple time frames. But what I found, and of course I've done all the stuff you've done, the market doesn't care about a clock, as far as the behavior. It's participant behavior. So fixed time has no place for me in trading. I'm not forcing the market into a box. I'm letting the behavior of the participants create what is happening, because that's the ultimate truth, not a fixed indicator that is backwards looking, and it's not contextually sensitive. Context is up. We are basically opening near all-time highs, and the overnight high was above us. I suspect you might say bullish. Now, how does the market work? Market goes up to go down, and the market goes down to go up. Write that down. And of course, write this down. It's random, and we're all clueless. Now, maybe you're not. I am. And I used the word clueless. It's a discipline thing for mind state. Not ignorant, clueless. Clueless is terminology, personal terminology, because I have to remind myself that I don't know what the next thing is that's going to happen. I don't know what will happen, so I am continually clueless to be flexible and open-minded. If I get myopic and only think one thing, I'm potentially going to have a bad outcome because I'm not responding to what's in front of me. So this is the RTH Open. Let's move along. I see my buyers. I see my sellers. Let's look at microstructure. The yellow line, and this is called the developing volume point of control. It starts at 0 at RTH Open. This is the session volume profile. This is going to show us all the volume as it comes in. Over here is the chart volume profile. It's going to only show us the volume that is currently in our view. Okay? So this lets me zoom in. And over here, we're going to see the delta. Same thing. Buyers are here, and you can see the buy delta. So these, and what is delta? Very quickly, it is market orders and stops, which become market orders. So when we see delta, we cannot tell what it is in the sense of, is it stops and no real buyers, or are these buyers and they're, I don't know who sold this, but let's just say these are buy stops. So somebody, I don't know, is a seller. So right here, I see a sell iceberg. Now let's start putting pieces together. This is micro high volume structure. This is, you see the high volume. I will start drawing, and here's yesterday's high and the all-time high. Going to the moon, right? Let's watch. This might be too high. Why? I have a buyer there. I have a seller here. I have micro high volume here. Let's just follow the yellow brick road. You've heard that before, right? See it? Now let's look at the difference. I'm taking you in. This is the stop and iceberg detector. I find it as an important tool for me. I want everything on my side. I mean, think about what you've paid in your developing career either in trades that, stops and the rest of it, which we all do, by the way, and not having insight, using what other retail traders do. In other words, just walking in their shoes and anticipating or expecting or believing that you're going to have a different outcome. I don't want to do what they do. In fact, I want to be sure I don't do what they do, because their failure rate is exceptionally high, as you know. So what do I know that happened here? This is called micro high volume. Now, it's not actionable for me. It is a suspect. And I don't know anything here. Why? Let's just look here. Buyer, buyer, going north, right? The market rotates down. I still see my buyers. Where's my stops? Under the opening swing low, which is basically here, right at the open, and here. So this is my opening swing low. This is very important. This is also called the opening trade and VPOC migration trade. I always caution, and I'm going to repeat it indefinitely, you can learn to do this, but until you have an edge everywhere else, you don't play in this box, because this sandbox is speed. We are in here 1 minute. So right here, I have my buyers. I see my seller. Micro high volume. That's what it looks like. What happens here? Buyers going to the moon. What's the difference? 37 buy stops here, 7 buy stops here, 10. Where's my buyers above here? And this is a suspect. I have no clue. Now there's more volume here than there was down here. This is called VPOC migration. This is saying in minutia and micro or fractal that this is too low and this is the new retail price. Think of this like a little store down the street, and this is now the new price. However, and here's where it gets joyful and crazy like everything. So here's the new price. If this price becomes, there's 2 possibilities. We continue higher. In other words, too low, right? Or this new retail price becomes too high. Me, I have no clue. It's not my job. Is it your job to pick the high and the low? If you can do it, DM me. Me, not so much. So now this might be too high. I break away from it. This now becomes resistance. This is support. But where's my stops? Under here. Let's watch. Now, this in the TraderLab might be a short. For me, it is not. Why not? Because of context, which is up. So I know that early buyers have their stops here. I like to spend time here because you can learn to understand market mechanics. So this is a variable high volume node. Too high. I'm not paying that. This is a little store. I'm out of here. This has the stops. Remember, this is why it's the opening trade. And I always say, don't play here. Read it, narrate it. You need to be unconsciously competent to operate in this. There's my break. There's my stops coming out right here. Thanks for playing. Your broker's going to send you a nice little fruit basket for being such a nice player. Now, what do I see here? Sellers here, microstructure. I'm going to put a little line on here. I'm just going to take you through some micro if you want me to. If you don't want me to, I'll speed along. What would you like me to do? YouTube, microstructure. You want to see how to look inside using order flow? I get a yes. You like the micro. Okay. Well, this is order flow. Now, when I see sellers here, look at this. Seller, 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 seller. I see a buyer here. Let me show you this. It's covered up. Right there is absorption. This puts my antenna up. There's a buyer absorbing the sellers. So my antenna's up. I'm going, all right. Sell stops, buy iceberg. This seller is absorbed. I now have my sellers here, and for all I know, it's going to zero. buyers. What does that tell me? These guys were absorbed. There's a buying iceberg there too. And micro high volume. Let's put a little line on this thing. So this right here is a auction the same as this is up here. This is daily volume. In other words, as the whole day is, coming in, this is where all the volume is up to this point in the full structure. As we go down in fractal, just like what happened up here, microstructure, you see it right there, and it's a variable high volume node. I'm not going to put it, but down here I have the same thing, but most of the volume is here. So I have the same exact thing here as there. Does that make sense to everybody? How are we doing in YouTube? I want you guys to follow. Please give a thumb up if this is what you like, because you can learn to read. It doesn't take away stops or anything else. But here's what's important about this. This is the retail price in the developing time frame. The early buyers got taken out. This was too high. This is retail. Stops, VWAP are here. Currently, this is potentially two-sided trade. Let's see what it does. And this is a potential long. Now, what I do is when I see this and I know that we're right by, remember, everything already went over that. You can review the stream. Remember, this is available to review for Bookmap Discord TraderLab participants. If I pull back to here, it sets up a long potentially to here, and wherever. Let's just see what it does. And this is not a trade other than structure. Let's just look at it. Where did it come? There. This, now I didn't take this. I'm showing you structure. Look at the behavior. If this is too low, this is called microstructure. And this is, now I looked at this. This is a trade I would take. Why could I not take it? I want you to tell me. Why can I not take this trade? Anybody? Right. Anybody? How about YouTube? Why could I not take the trade even though it did exactly what I suspected? Range. Exactly. Now, here's what's important to understand. This is auction mechanics, how the market works, why it does what it does, and how you can get in alignment with it. This is a structured trade. It is not qualified. I want you to see the behavior. Microstructure, think Russian dolls, little doll, right? The midget, inside of higher time frame. This is too low in this fractal. This is retail in the next fractal higher. We have mid and VWAP. What might we see at the mid and VWAP? Selling. What else do we know? This is the target. That's all I can tell you about this. But so I'm looking at it and I'm saying, oh, there's a long. And then I'm also saying, you can't take that long. You can't, because I can't, by the time I get to enter, the best I got is maybe there or there. Where am I going? There's no risk. I can't manage my risk with this, so I have no trade. I just want you to understand. But here's what you can learn from this, how it works. If this was out here someplace, it's the same trade back to here. So let's see what happens. Are you guys tracking? If you are in TraderLab or anywhere else on the planet and you took this trade, and again, anything can happen, you need to respect what the language of the market is. I don't use indicators. What would my indicator do? I don't know. If I had a long, which I wouldn't here, where would it tell me to get out? Where would it tell me to get long here? Or would it tell me to get long there? If I was getting it long, I want to get long here with a stop under here, and I got a scale there, and I can't. I'm just making a point. Let's go along. This now is too high. Stops are under here. Now, remember, absorption. Let's look out here now. Come on. Going down. Oh, my goodness, it's the end of the planet. Let's watch. I know I took a long somewhere here. Hold on. I've got to scroll back and look at my, where I did my trades here this morning. Where's that? Yeah, I was kind of sloppy. I'm looking at my entry. It's embarrassing. Let's look. So I'm under this volume. So I see this as resistance at the moment because it was and is. See right here, let's look at this for a moment. There's absorption. There's my buyer. There's my obstacle. Okay. I come back here. There's absorption here. But here's my obstacle. There. Right there. See? Buyers are here. Nada. Got my sellers here. Okay. Get the buyers here. Where do I go? Here. Buyers were absorbed here, and that's our obstacle. Stops are sitting here, by the way, right? All retail traders are kind of like lemmings. They do certain things collectively. When I was early on in my trading career, I did the same stuff. I put my stop at the mid. We didn't even have a VWAP, I think, at the time. I started 1980, so I barely had. I did my charts by hand, and computers in 1980 were not real. They didn't exist yet. We used terminals, basically a dumb terminal. Ran in fact, I was across the street at the time from the CBOT, and they had an extension cord, like not extension cord, a phone line, that went up to Massachusetts to be able to get data to feed a terminal. I mean, a bit archaic, quite a bit compared to today. So things were analog. Anyway, back here, too high, absorbed, seller, absorbed, too high, come down, end of the world. Where's it going? No clue. Statistic. I'm looking at this and I'm looking at this. Let me give you these statistics. So I am thinking that's a target. I want you to know. So 72-ish% probability we get to the overnight mid. Value area high. Come on. Losing my mind. I got so many statistics. About 70% probability. Past performance not indicative of future results. You got to vet everything. Life in the fast lane. So I'm looking at this. So I'm thinking, because of the probabilities, I'm going to come out here, and then potentially I'm looking for a long to come back here. It's called mean reversion. It is a context specific. So right here, I see my sellers. I got my stops and I got my icebergs, and I'm sitting here munching on a piece of lettuce and posting in TraderLab, but I try not to do that when I'm trading because you really got to be in the zone. Yeah, it's like a flow state. And if you take yourself out of the flow state, you're not really helping yourself. So here's my sellers. Now, I don't know. I mean, we had the same thing here, but watch the similarities in behavior. I had my seller here. That's why this happened. I had my buyer here that was absorbed. That's why this happens. Narrate with me. Now I got my sellers here. Looks like it's going to zero. What happens here? I get my absorption. I see my buyers. Watch. Now, I know this now might be too low, and I have no clue. I see my buyer. Look at the similarity. Now, this was more aggressive, so I'm looking at this. Okay. I pull back. This now is potential support. Now, I don't know. I'm like, I don't know. What do I see here? Sellers. This is order flow. What is sitting right here? Volume. What happens here? Buyer. Change in behavior. We're going to label it. Now, guys, I don't want you to think that this is something you can do without practice, intentional practice. This is like music or dancing or a foreign language. I don't use indicators, and the reason I don't use them is I have trained myself to understand what this means. Order flow. It gives me an edge because maybe if I can act quicker than other participants, I'll get more range, less risk, and this would be my target. Remember, this is the same trade from here to here that didn't qualify. Now I have range. Let's see. So right here, chop, 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 chop. It is a, watch, let me just show you. And again, if you guys don't want me to do this, I will not do it. I will move on to something else. So this is a consolidation. And what happens in, you know how the market gets, this is what happens in all fractals and time frame. Market gets directional and then it pauses. Chop, 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 chop. Consolidates. And then it can continue or reverse. If it reverses, then this is too low in the microstructure. There's your test, but there's your target. You see the problem? Now we come down here. Chop, 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 chop. It's the same. What's down here? Same thing that was down there. Absorption. What's this? Absorption. Here's my buyers. And I'm going, I don't know. And there's my sellers. So I'm going, you know. Here's my volume. There's the change in behavior. Now I have that high volume node right there. And you could see it here. And this is what a consolidation looks like. It's rotation. Well, that's what this is. Rotation. So let's see now if there's a long in this. We pull back. This is a trigger. Now this migrates down. I am not thrilled about this. This was a bit of a dilemma. However, what is the context? Up. This is now a variable high volume node. And this is a judgment call. And you have to make the judgment. What is the context? Up. What did we do in the ETH? Too low. What about my statistic below? Well, I got my buyers here. What am I going to do? I'm going to get long. Watch. Where? In here. Where am I going? For me, where's the stops? Here. What do the retail traders do? Trail their stops. What did they do here? Sold it. What was the retail price? Here. Is it reasonable to think that we will get into the stops for the trailers? Remember, retail traders, and then check here. That's my trade. Scale. Now, helmet. There is resting liquidity at, oh, this is the next target. I'm sorry. Overnight high. Let me go back to the stats, and please give a thumb up. Let me know you're getting something out of this. Let me know if this is different than what you're doing and if you might be able to craft a trade plan and an edge. There's a 69% probability, past performance not indicative of future results, in this context, in this opening condition, that we might get to the ETH high, 69%, past performance not indicative of future results. You got to vet this. And there's more. You say, really? Yeah, really. Where is it? Resting liquidity at 50. I posted this in the TraderLab. Be conscious of 50. So the way this trade works is long here or here. You got the same trade. Can you see the trigger? Stops are sitting here. VHVN here. Scale. Overnight high, 69% probability. Context is up. 50 resting liquidity. That is posted in TraderLab, and that is our sequence. Let's look at it. VPOC migration. What does that tell us? You are now following the yellow brick road. What is the yellow brick road? It is saying at the moment, remember, this is all dynamic, so we're kind of trying to groove with it and stay in alignment. Too low. Retail. And where's our target? ETH high. Where's that? There. Target. Watch. Next target. TraderLab. Trade. What else is up here? Variable high volume node. Just watch. Now what? Watch. Where's our next target? 50. Next target, TraderLab. Are you guys tracking? All this is posted in TraderLab. I hope you're getting something out of this. Please give a thumb up in YouTube. Did you guys, how we do in TraderLab? Give me a thumb up in TraderLab. Let me know you guys participated. These are structured trades. These should be part of your trade plan. How about in YouTube? I do the same thing every day, and I hope you don't find it boring because this is the business of trading. This is not a video game. This is business. So how do we use order flow here? Now, I posted in TraderLab, I said 50 is the next target. Now, here's another structured trade. Now, I'm going to tell you, here's how you might use this. And this is all part of the TraderLab process. And what it is remember, order flow with a high tier tool using tools. I do not use indicators. I want to make a point. Why don't I use them? Well, you could probably figure that out. I don't use them because if I can see here what's going on, I'm way ahead of the pack. So I'm going to show you a short and I'm going to show you a long exit. They are the same. So this is the next target. And why? Order flow, resting liquidity. This is the limit order book. And we can see them with Bookmap. We see them. I don't have to be looking over in the limit order book to see the adsiples and the algos. This is an algo. It's noise. I ignore it. I care about this. It's not. It doesn't trade. It's a bracketing algo. I think it's some guy that's testing out his algo because that's all it does. Turns it on at 7 a.m., turns it off 30 seconds before a news report, turns it back on again. I think he's testing. I don't know. Doesn't matter. But this is, you see the difference, how this is in the book? That's resting. This. See this? So that's significant to me because unless it pulls, it is a target. So my last target on this trade, for me, was ahead of this. And then that's that. Finito, see you later. And if it keeps going, that was my trade. That's it. Now, right here, if I was going for whatever, if I had more runners, which, whatever, right here is important. Let's look at the change in behavior. Okay, are you guys tracking or are we good? Just let me know. I'm going to take you now into the minutia world, back into the micro. Give a thumb up in YouTube, guys. It gives me encouragement. I see a lot of TraderLab participants took this trade. Congratulations. Welcome to the business of trading and welcome to managing your Hyde. Remember, Jekyll and Hyde. The emotional, and I did an hour and a half, I guess you call it a talk, that was recorded, that is now part of the TraderLab library of emotional states, psychology, the biggest impediment. I believe anyone can learn to trade if they do the work, and it's work. And all that's done outside of trading hours. You bring your result to the trade, and then your psychology is what's going to interfere with your intention. Because the primal wiring is beyond your conscious brain. We kind of, depending, and I'm not saying this is fact, I'm just going to say subject to what your thought is. In evolution, we theoretically climbed out of the slime and learned, like any other creature, that there are predators out there. So we're wired to avoid predators and to try to survive. And then there's, let's just say, selective evolution, maybe, if you accept that again. And if that's the case, then those who survived, those genes, that DNA was passed on. So that is operating under the intelligence and consciousness and the rest of it that developed over time. That is part of us, and our intellect cannot suppress it. You need to come to grips and acknowledge it, accept it, and it doesn't matter how it got there, it is there. Then, once you understand this, it becomes conditioning behavior to change your wired responses. This response mechanism will be your biggest obstacle because it is completely not aligned with risk. It cannot differentiate between the saber-toothed tiger or some other predator and the perception of fear, pain, and maybe death. It doesn't know the difference. So that's a little bit. There's an hour and a half of that. It's in the library. And you guys, if you're in YouTube, can access the library not only of that topic, which I think is the most important topic. You can also access a library of webinars and structured trades that you can download and then reverse engineer. So this is our target. Let's look what happens here. I see absorption. That's what this is right here. So these are limit orders. When you get buyers into limits, they absorb. Now, the key to this is what happens. Do we rotate off it, break above it, come back and test it, and continue for a continuation trade? It's a structured trade, just saying. Or, here's always the joy, what happens on the test? It's a structured trade. Now, I was saying just a little while ago, two ways to use it. An exit. In this context, it is not a short. Why? We are out of yesterday's range. We are making a new all-time high. Now, I see this as two possibilities. A short, if qualified, or an exit. I want to make that very clear. So for me, if I was inside yesterday's range, it might be a short. But because I'm outside of yesterday's range and I'm out of balance at the time, making new all-time highs, then I'm going to say not so much. So I have it as trade management or potentially another long for continuation or nothing, just however you determine to use it. So let's look. So right here, buyers, absorption, break low, antenna up, teeth chattering. Right here was the last absorption. Right there is the micro high volume structure. Stay with me. This is like from Gladiator. Stay with me. You guys ever see Gladiator? Great movie. High volume. Absorption. Too high. Break low. Now, often what happens, and this is in TraderLab, you can download those PDFs. I've isolated some of these for you. And by the way, I'm not a vendor. There's no course. The TraderLab's a community of traders that have come together to leverage their collective experience. There's no right way to trade, guys. There's only a way that gives you an edge. It doesn't matter how you do it. If the Magic 8 Ball gave you an edge, we'd all buy Magic 8 Balls. I mean, believe me. There's sellers, buyers are absorbed. This is absorption. Remember what it is. Pullback. Buyers take a shot. What do I know here? Sellers absorbed. I come up. I have, let's look closer, selling icebergs. This is why they stop an iceberg detector. And what's up here? 2 buy stops. What was over here? 159 buy stops. Absorption. Absorption. What's going on here? Absorption. What about this guy? Going to the moon, Alice. Not so much. A seller here. Buyers try again. They are absorbing the seller. right here. And the sellers beat the buyer here. So when you see the red bubble, that is aggressors, right? And it could be anything. I mean, you got 4 sell stops, who knows? And then the buyer is the absorption. That is saying to me that these sellers are being absorbed by a buyer. Now, the thing we want to know, and it's the opposite of what happened here, these buyers are being absorbed by the seller, and you have the liquidity. So this guy here is out on his own. We don't know. Buyer, 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 seller, seller. So right here, this buyer and this buyer has to get over here to continue up. What do we get? No buyer. This is the last stand here for the buyers in there. And we break low. What does that do for me? Let's get out the scalpel and let's mark it. Follow. Now, this is auction market theory. And what I'm doing is extremely nuanced and refined. This is a high level. This is not where you start. This is where you can go. And it takes a lot of time. Now, here's the thing about what I'm doing. What I am doing is the same exact process in all time frames and fractals. This is a fractal. Now, I don't necessarily activate my brain in this, but I'm always narrating. I'm always going, if this, then that. If not, then what? If this is too high, if this, then that. And then potential retracement. If I get above it, so if this is not too high, then what? Then higher. If it is too high, then what? Then lower. Here's my fulcrum or my microstructure, my retail price. Think of this consolidation like your store down the street. I always think of it Saturday night. I want a pint of ice cream, but there's not a lot of buyers and sellers in here, but there is a retail price. If these participants, of course, and these think that this price is too high, we can leave it. So I have these guys stuck. I see an iceberg here, and I get my sellers. I'm now under this, and I'm now under that alignment. If I'm long, I am out of here. If I'm not, quote, I want to wait, I can put my stop under here because I had buyers here. It's up to you. You know, me, I hit the plunger, eject the canopy, bail out. Watch. And where do we come back, you say? Watch. See it? What does that tell you? Right here. Right there. Right there. What is that? Buyers, absorption, remember? Right back to 50, selling iceberg, too high, break. So your short can be, well, your exit, shall we say. If you weren't, quote, sure, if there is such a thing, which doesn't exist, this is the end of the line for the longs. If this makes sense, I know I'm spending a lot of time.
Absorption, sellers, volume 100.
Peter's asking me, what do buy stops and sell stops actually mean? A stop is a protective order. So, and what it is if you had a position in here, wherever, let's pick wherever it is, and the market, and you want to limit your risk to a certain amount, whatever it is, you put a protective order in. And what happens is if it's a buy stop, it basically means it becomes a market order. So if you're short, you would use a buy stop. If you're long, you would use a sell stop. Stops are protective orders. Now, there's some traders who use a stop for entry. Me, not so much. But that's up to the trader. But most traders do not use stops. If you're using a stop for entry, it's typically breakout trades. I don't do that. I'm not saying you know, but generally stops are protective orders. I hope that answers your question. Well, there's the thing about taking stops. We all take stops, first of all. The thing is, you might not be entering where you have an edge. You might not be entering with a sufficient range. You might not have a vetted plan that has an edge. If you're getting stopped out, then you got to go back and do the work and determine why a trade fails. And I've shown in the TraderLab, I have binders of research. Well, obviously, more binders than I care to think about, but not including the ones I've thrown away. But binders and binders and binders of research. I think I got Bookmap in 2012. And I will tell you, it took me a long time to understand what I was looking at. Because like many traders who are indicator oriented, we think that a red something up here means that you sell this and you buy the green one or whatever's below you. That's not how this works at all. There's much more to order flow. It's its own tool, and it is special. And you, like everything, you got to learn it. You may be operating with no edge. You may be operating where you have no range, and you may just be impulsing and hitting FOMO. I can't say because I don't know what your plan is, but I will say if you're getting stopped out a lot, then you're not trading well, and you need to get back and do your work. By the way, welcome to trading. We're all doing work. I do work. I'm still doing it. Nobody's got a monopoly on not getting run over. I mean, getting run over is protecting your account so you can come and do the next trade and improve. If you're taking stops and you're trading live, then you should be on sim. So let's look. So this was, you'd be out of your long, and this is a short, except it's not for me. Okay, now what? Let's come back now to the condition of the market. We know this is too high. I only had a couple trades today. So let me try to find my next trade. Where the heck is it? Now, the fact that what I do, it doesn't mean anything. It's kind of like, well, whatever. Where is it? I only took a couple trades today. I mean, okay. Let me show you this. So we pull back to the VPOC. This yellow line, remember, is the highest volume for the day so far. So that's our retail price. We know this is too high, and we know this is the fair price. How does the market tend to work? And this is what auction market theory is all about. What is the purpose of the market? It's to figure out what's too high, what's too low, wherever that is, and what's retail. So the possibilities are the following. If this is too high and this is too low, we can rotate back up to here, right there. And that's one possibility, just saying. The other possibility is, and this is where you got to put your thinking hat on. Everybody ever hear about thinking hat? Where's the stops? Here. What's too high? 50. Where's the stops now under the current low of the day, which I believe, where was it? Here. So stops are under the low of the day. Notice we had all these icebergs. Wonderful. Very exciting. So this is the IB low, initial balance low, and this is now the initial balance high. What's important about this? Let's come back to our statistics. We have, in this condition, a 67-ish% probability of taking out the first hour's high, this. And we have, at some point, about a 58-59% probability of taking out the first hour's low. However, this is part of the joy of randomness. And we know and this statistic is open, and we also have, and we know this might be too low. Remember, top of the stream. Remember, these streams are available exclusively to Bookmap Discord TraderLab participants to review, reverse engineer, and compare to what you did. And I'm not saying what I do is any good. I'm just saying it's one way to slice and dice the enchilada. So, too low, retail, sellers, buyer absorption. Where's my resistance? It's here. And the market is long. So I start I'm always narrating. What do I know? Too high. What do I know about this? Microstructure. Too high. Right there. So I'm going, well, this would be a target and coming out the top. I know at 9:30 Central Time, the first hour's high and low is going to get set. I know if I take out the first half hour's high, which I did, that I have a high probability of taking out the first hour's high. So everything is telling me, go north, young man, go north. However, this is always the fun part, randomness. So what do I know? Let's tell you what I know. I know that's too high at the moment, and I know I have a high probability of coming out here. I also know, and I posted this in TraderLab, and I mentioned it at the top of the stream, there's a 29% probability that I'm going to take out the first hour's low and then take out the first hour's high. So I'm in the middle. I call this like no man's land. So what do I know here? Too high. Micro. Let me just highlight it because I'm thinking I'm looking for a long. And my teeth are chattering. Let's follow the yellow brick road in the micro. There's your high volume. Now, here's the other way to look at this. Sellers in control. Buyers take a shot here. Where's my buyers here? Sellers take over. I come to my retail price. I see absorption. This suggests to me upside rotation. Where was it too high? Right here. Where do I come? Here. Right here, the buyers have to come through. If not, it's too high. Watch the behavior. Support, resistance. Support, resistance. Keep watching. What's down here? Too low. And what do we get? You're going to like this, maybe, maybe not. What's this? Where was support? Where did my buyers come in before? Here. Right? This was our long, wasn't it? No. What's this? Stops. 920 sell stops under here. This is the IB low. So we're taking the weak longs out. 920 stops. Absorption. This is called the IBF. It is a mean reversion trade. It is a structured trade in the Bookmap Discord TraderLab, and you can download these. Here's the stops. So right here, what do I see? I come under. I know this was where the buyers were activated previously, and I know retail traders, and we're all retail traders now, put their stops under that swing low. And I have a statistic. And what was my other statistic? 29% probability I'm going to take out the first hour high. Let's think about this. Absorption, icebergs, stops, right here. IBF. Let's look at it. Now, how do we figure this thing out? You're asking. And I'm asking the same question. Should I take a long here? Absorption. Let's look at the components. Chop, 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 chop. And I'm ready to lose my breakfast again. Why? I tense up and I'm hearing the voice in my head. I'm hearing hide. Why? I don't want to get eaten by the saber-toothed tiger. My brain can't differentiate. I'm sensing danger. Yes, there is. Danger of loss, danger of being eaten by the tiger. absorption. Let's just look at the structure. So chop, chop, chop. Okay. So I'm going, and I'm looking over here. I'm thinking, this thing's a piece of junk. Never mind what I'm thinking because I don't know. So what do I do? Let me show you that. I'm going to go back to my exact entry. And I was not thrilled with my entry. I'm going to tell you that because I was conflicted. Where is it? Got to look on my chart. Hold on, guys. I'm trying to scroll back to my trading doohickey over here so I can give you where I got it. Where is it? Wow. I want to give you where I actually. Okay. Took long enough. I didn't do such a good job on this. And part of that had to do with these statistics. I'm working on that. I'm trying to get better too, just so you know. But right here, I was very conflicted. So I'm looking at this. I see this. So I know the buyers are here. I see the stops out. And I have a problem mentally because of this. It has a high probability. Remember that. We could easily go down there. Why not, right? So I see my sellers again. So right here, I'm still thinking, I'm doing this. I see my buyer. Watch. So right here, I now have absorption. And I'm still not there. I see my buyers here. I see my seller here. This is absorption. So I'm looking, and right here, I think it's going to the happy hunting ground. Where did I get long? Guys, I gotta tell you this because I went through the, oh boy, you shoulda, nada. Yeah. I really didn't do a good job. Let me just tell you exactly. I got long at 41.75, and I'm really not happy about it. What time was it? Wow, I can't think. 10:02. Yeah, right here. That's me. Okay. So I bought there and I'm leaning against this. This is not a recommendation. My stop is under here. This is my scale. Okay. This is where I'm going. And then I'm holding for out here. And I posted all this 47. This was actually my target. And then the IB high. So let's look. So I get in and I'm accepting a stop out. Okay, this is where I got long, right here. 40, whatever it was. 41.75, I think I said. Yeah, 41.75. This is me. See me? Right there. So, and then the book gets swept. And that was kind of like a breath. I started breathing again. And now I'm going for this. So let's watch. I think I posted this in TraderLab. I believe, can't remember. I don't call trades, guys. So this is the scale. Now I am risk neutral. I know now this is too low. And let's look a little further. The book is swept here. I have buyers, buyers, buyers. Where's my sellers? So right now, my high volume is here. My stop is now here. I move my stop under this volume. We can still come back here. So I want to be where this absorption took place. And then these guys activated. So my stop is like right under here. So, and, I'm just hanging out, right? So now I'm scaled. This guy was absorbed. So now I'm holding. Watch. Well, look what happens here. Let's come back to the microstructure. Right here, I have my sellers. I come up here. Look at the aggressors. I now have my sellers. Remember, mid, VWAP. This is why I'm scaling here. Why? Retail trader behavior. What do? Lemmings. No offense to retail traders. I'm one of them. They sell the VWAP and they sell the mid. That creates this. What is above the VWAP and the mid? Stops. And what's over here? Too high. Let me show you the next targeting. And I posted this in TraderLab. 47.48. This. So for me, this is the next scale. I believe it was here. Let me look. Whoop. Actually, what you have is coming out above here, taking the stops out. So for me, I think I posted this around 47.48 because it's a low volume outside edge. This is mean reversion. And we have a high probability statistic here. So this is where I'm going. Let's look. Target, done. And I'm done. Then I'm streaming. Look at this. Where are we going? I guess I should have stayed long. Can't do anything about it. That's my trade. Questions? Now we're current. This is TraderLab. Hope you got something out of it. Well, Peter, stops being hit are very important. So it isn't a small thing, Peter, that stops are getting taken out. What's important is what happens after. If you have buy stops, they are buyers. If we get and what happens? We get sell stops. Is it just, in other words, if the trend is up, how do you use the insight this provides? How about right here? I'm not even, I just looked at this, so I have no clue. I'm just going to give you a sense of this. If I have stops coming out, who takes the other side of the stops? There's much more to it. Here, I have exhaustion. I have a buy iceberg. That's a buyer. I pull back. 16 stops are coming out. Less sellers here. I have a buyer. Really important for me. If I have a high and I have exhaustion, that's relevant for me. We all know there's stops at swings. Now let's look over here. Now the market's going up. There's 6 buy stops here. If we get over this and there's less stops, that is divergence. I want to know that because it might signal, and that's not really what it is, indicate exhaustion. So I'm going to be looking at this as a tool to help me gauge if I have stops and then I have buyers above these stops, that's initiative buying. If I have buying that is only stops and they exhaust, then counter rotate. It's a whole different mechanism. So I'm just saying, Peter, it's all a matter of how you develop an understanding of tools and then whether or not they can fit into something that you can find useful to give you further insight than most other traders have. And you don't need to, of course. It may not be relevant for you, but it's relevant for me. So let's just watch. I got 47. I got 157, 47, 38, 4, and a selling iceberg. Let's just watch the behavior. Now, the question becomes, who's short up here? I'd like to know. These are the things I always ask myself. Who's short? Is somebody picking the high? Yeah, I guess so. Me, not so much. Not in my skill set. Well, that long was a nice long. See, if I wasn't streaming, and this is always a bit of a conflict for me, I'd be in this trade. So that's my choice, I guess. By the way, let's talk about this over here. I just saw this. Remember what happened at 50? Back here. The behavior. Bang, bang, reversal. Now let's come up to the next resting liquidity and see that you got to screenshot this, TraderLab. Let's look at different behavior, okay? Remember what can happen. What does it do? Bang, and instead of doing this, It breaks high and pulls back. This is a continuation trade. It is advanced in TraderLab. This is what I was alluding to at 50. And if you're in TraderLab, download, remember, if you're in TraderLab, you need to be thinking about all this. I mean, piece by piece, step by step. There's your absorption. There's your icebergs. That's what this is. There's your stops. They absorbed. We broke high. What did we do? We pulled back to the absorption. Here, let's look at microstructure. This is a advanced structured trade in TraderLab. Now, if I was hanging out here doing my thing, I would know, I do know what this is. And now I have that. So now what I have is location, potential rejection. This is just like, think of it like a VPOC of sorts, because there's volume here. I break high. If I pull back and I can pull under it and reject it, all these are continuation longs or nothing, subject to your plan. I now get my buyers above. And let's look what happened. Sellers here, you can see the absorption. Buyers above it. Pull back. Buying absorption into these sellers. Buyers pull back. Sellers, 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 sellers. Where are they going? Where's my support? Here. Buyers, sellers. Chop, chop, chop. What is that? Micro high volume. What is underneath now? Let's go back here like this didn't happen yet. See it? So, back here. Break. Buyer. Support. Outside edge. Let me draw a little box. This is advanced, guys, and these are not recommendations. If you're interested in this, how this works, this is the purest, in my opinion, and just an opinion. This is what trading really is. It's not your indicators. Your indicators are output of price, derivatives. It has nothing to do with the part, what your indicators are doing, which is fine. It's taking this output and trying to translate it mathematically into something that you can use. What does your indicator tell you? Here, anything? Is it give you a way to add because you understand context, structure, and this? And there's another trade that might have developed. I have to go back and look at it. So this is where this trade will fall apart under here. Here's your micro high volume. Here's your seller. Do we have a trigger yet? Let's look. Where is the trigger? It's right here. Here's how this would work. Now, this is so advanced. This right here is the event, okay? Here's the absorption. What I know is right here, that seller was absorbed. These guys, these sellers, the iceberg was absorbed. I pull back, I got my sellers here, and I got my buyers here. There's resistance here. There's a buyer. Now I've got these sellers. This is micro. If you don't understand order flow, this is like speaking a foreign language. By the way, it is a foreign language until you learn to speak the language. Here's a seller, break high, and I get a seller here. This is a long. If it's in your plan, your stop's got to be under here. I can handle that, but you have to vet this. Let's look. What happens? Let's follow this. Micro high volume, right there. Break high, too low. Notice where else it came. There. This is advanced. You got to be doing some TraderLabage. Get this. What happened here? Buyers. Sellers were here. They got absorbed. They got run over, basically. Thank you. We got buyers here. Sellers are here. Buyers. Absorb the sellers. Break high. So now I know this is too low. This is too low. This is too low. Let's just follow it. Absorption, they get run over here. Absorption, where might you keep your stop? Let's think about this. What about here? High volume. Now you're just going to trail because there's nothing up here. I mean, you're kind of up in the, you need oxygen up here. Who knows? I don't know. Look where we come. Now, if you trailed your stop behind here, you get taken out. I don't know. You know, not my job. I can't predict anything. I mean, this is just trade management at this point. And, you know, I've gotten past the point of, you know, my FOMO wants it all. But I can't predict anything, so I just accept what the market offers. I take whatever I get, and that's that. Let's look here. I'm seeing sellers showing up now. You see them? Seller, 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 seller. These buyers are getting absorbed. Let's watch the behavior. And the fact they're getting absorbed doesn't mean the market won't continue higher. It's going to be what happens when we come back. So let's watch right here. Is everybody tracking? Please give a thumb up in YouTube if you find TraderLab something not only different, but maybe something that can help you differentiate what you do from what your competition is doing. Most retail traders buy a toolbox and it's plug and play. And then it's, oh, let's curve fit and get the right tweak into this and into that, you know, Trader Groundhog Day. I get it. I spent years doing it. I even did it in a very sophisticated fashion. I built trading systems and optimizations and, you know, all that. I did it. Why? I believed that was the right thing to do. So I kept doing it. And it kept falling apart. So I thought, well, then I just have to re-optimize on a schedule. And I would do that. But over time, so I was using metrics that were global, not specific. So when this crossed, this did this, and this combination of stuff, and it was variable combinations. So I could compress the market and tweak it to fit what happened in the past. I couldn't get it to, quote, predict what would happen now. How do I do that? I do it right here because I understand right here is a potential change in behavior subject to what happens right here. I cannot predict it, but let's look at what we have. We have absorption, we have micro high volume structure, and it's right there. So let's look. Buyers, absorption, sellers, high volume in the micro is there. I need to get over this to keep chugging along. If I can't clear this and this, then potential rotation. Can you read it? Now, not can we predict, can we stay in alignment? And if you could develop this skill, and this is not hang out for 2 weeks, this is not the Holy Grail. This is a way to interpret participant behavior, which is the market. Now, would I short this? No. If I was long, would I be paying attention? You better believe it. And I can't predict what it'll do. But you know what? I already know what it might do. And I know where it might do it, right here. So now there's my sellers. Right here was the absorption. If I clear this, I continue. If I can't get over this, then potentially counter rotation. That's what I know. So we'll watch it together. Is everybody tracking? So Peter, I hope I answered your question about stops. They are pretty darn significant. The numbers in the bubbles, Victor, are delta. I mean, there's no numbers. What they are showing me is aggressor at market orders. That's all delta is. And they're made up of stops and aggressors. And let's call a stop an aggressor because it's a market. Market orders show up as delta. So that's what we know. We don't know anything else about it. So delta is important, but it's not the the only thing in the mix here. Absorption, iceberg behavior, all this is all relevant. What happens right here is very important. For me, this is a trade management process right here for me. So I'd be looking at this and I'm going, if I'm long, I'm cheering for the home team to get above this. If I can't get above this, then I'm going to rotate off. That's what I know. Sellers, see the behavior? Watch. Guys, please give a thumb up if you're in YouTube and you're finding this interesting and useful. Also, please remember, there's a link in the bottom of YouTube. You can actually join the Bookmap Discord TraderLab community. It is no cost. And join a community of like-minded traders who are in the business. This is business. It's not a video game. I mean, it can be, but then go to the casino and make sure you get the ticket to the buffet and the cocktails, because that's gambling. And gambling's fine. Gamblers win. But over time, the house extracts the dollars from the gamblers. I want to sit on the house side of the table. I accept I have no control over the outcome of the next hand or the next trade. I just deal the cards. I do not, as best I can, take the last trade and make it part of the current trade. Each is unique. Each is random. And every time I do anything, I'm uncertain and I have fear. Fear of being eaten by the predator, because that's our wiring. I understand the predator response, and I have to manage the predator response, the fear. That's what I know. So here we are. We're going to watch this. Now, if we continue up, fine. We had a buyer absorbing these sellers right here. So that's material. So you got your sellers here, and the buyers stepped up here. So the buyers are still have the ball. They have to clear this to go higher. Let's see what happens. So nothing to do. But what I know is this is significant. So there's no short. Here's your sellers. And here's the other part. And this is where Bookmap is so handy for this. So I know this is resistance. Okay. I see absorption, this seller. So that right there is a buyer. So this guy was absorbed right there. And now I have buyers above. So there's no reason to be out of here long. But it was right here. I have to watch this. Does that make sense? Please give a thumb up in YouTube. Remember, if you're in Bookmap community, this stream is available exclusively to you. If you're in the TraderLab, to reverse engineer, screenshot, circle arrow, add it to your library, and take these individual structures, analyze them, just like I have. This is kind of what some of this stuff looks like. This is just a quick example. These are available. When I did these, I'm not a vendor. This is from 2020. Traders were saying, what are you doing? Because I guess it was a little different. And it is. So I put these together. This is actual trades, and some of them are screenshots, but a little explanation. And I did this early on. Bookmap asked me if I would, do some of this. I'd say, all right. And then they asked if I would stream. And at the time, this a couple of years ago, I said, yeah, I'll do that. And it's kind of expensive for me to do it because I don't trade. But I'm going on 45 years of trading, so I'm not too concerned about that. I have plenty of trades. Not only have I taken, but still to take. Please give a thumb up. Click the link in the bottom of YouTube if you want to visit the Bookmap Discord TraderLab. And also remember, if you do subscribe to Bookmap, you can take advantage of the the Bookmap Academy, which will give you mentoring, call it tutoring, coaching individually on how to use a high-tier order flow tool like Bookmap. There's a lot of additional resources for if you come to TraderLab, besides TraderLab community, stocks, options, crypto, how to use a high tier tool like Bookmap, options, market maker behavior, algorithmic behavior, swing trading, and a lot more. Please give a thumb up. Use the link in the bottom of YouTube if you're interested in downloading the PDFs. You also have access to the Bookmap Discord TraderLab library. And be sure to start with the primer webinar. It's got over 29,000 views. Now, the thing about the TraderLab, there's no advertising. I'm not a vendor. It's kind of the best. I think it's might be one of the best kept secrets. So if you have trader buddies who might benefit from the community in the TraderLab, and the TraderLab community is all different kinds of traders, all different experience, and all different tools. Bring it. Let's take what you do, help us be better, and we maybe can help you be better. This is about the business of trading. If you're interested in developing a career in trading and willing to do the work, and of course, past performance is not indicative of future results, come to TraderLab. Ask the participants in the TraderLab what their experience is, pro and con, what they would do differently, even in the TraderLab, and where they would start. Thumb up, please. Thanks again. Appreciate you visiting TraderLab. Trade safe. Follow a vetted trade plan. Leave the gambling to somebody else. Look forward to seeing you tomorrow.